Elasticity is getting, it's getting larger, the margin of when people need or expect it to get paid and therefore can't turn it around to then go buy goods and services themselves. And so what's happening is a real moment where this increasing demand for digital automation in businesses is incredibly important. There's one other thing I'd like to say as it relates to that. The Zelle model, you can take like the memo in the transaction and you can put a little bit of data. What the clearinghouse has done with the real-time payments platform is relying on a data protocol called ISO 20022 that has thousands of data fields for information. That is helping to solve the large corporate and supplier payments invoicing so that you can match up what you received from the supplier with what you expected, and therefore can confirm your purchase. And that requires a lot of data. So some of these things that are making headways are going to get accelerated post-COVID or in the middle of COVID, and faster payments is going to be a vehicle to help businesses, I think, recover. They're going to automate their business processes for sure after this.
It's really
very long-winded.
No, it was really fascinating. I think that trend, that acceleration trend that you're pointing to in the B2B space is one that we're seeing across payments. As trends that were already developing or being accelerated by the pandemic. And I thought maybe we would turn briefly then to another one of those trends that we're seeing accelerating, which is contactless payments. And Jordan, I know that you've done some consumer research around contactless payment usage during the pandemic, and I was hoping you could highlight some of that for us.
Yeah, I'd be happy to. And I think you're right. Certainly the pandemic has been a catalyst for contactless, not just here in the US, but across many markets, even markets with fairly high levels of utilization. We went out into the field, I guess it was in early July, with a consumer survey in the US market to really kind of take the temperature of consumer utilization of different types of payment methods and experiences during the pandemic. And certainly an interesting story around contactless emerged. I think there were really three key storylines from my vantage point. The first was around cash displacement. And as consumers ourselves, we've been seeing this as we go to different storefronts. We see signs out front encouraging the use of cards or contactless payments. In some cases, merchants outright not accepting cash. We've seen more attention in the media around the unsanitary aspects of physical currency. And that's leading to changes in consumer behavior. And what we saw in this particular survey was 40% of consumers say they're using cash less often since the pandemic began. And conceivably, that volume is moving elsewhere. And we think quite a bit of it is obviously moving to cards, but I think more specifically towards contactless payments. And that sort of leads us to the second headline, which was that there was quite a bit of new user activation when it came to contactless payments in just a small period between March and July. What we saw in that time frame was roughly 1 in 6 consumers here in the US made their first ever contactless payments. And I think part of that is thanks to consumers simply just thinking more about what they're coming into contact with and eschewing cash, but also greater availability of different types of contactless payment methods. And it's been interesting to see the pandemic collide with what we would consider to be the largest period of contactless card issuance here in the US market. Several 100 million contactless cards now in the hands of cardholders across the US. So more choice is always a good thing when it comes to accelerating different types of payment trends and behaviors. And along with that, we're seeing some stickiness. So 85% of the first-time contactless users told us that they plan to continue using contactless moving forward. The last one I would point to was around increased utilization. What we saw was that of existing mobile wallet users, people that had used wallets like Apple Pay or Google Pay at the point of sale, 2/3 of them told us that they're now using their wallets daily or weekly. So we've seen existing users certainly pick up, in terms of the number of transactions they're making with contactless payment methods. And I guess that leads to the final point. Why does all of this matter? I think it matters quite bluntly because contactless users are more valuable. And if you were to talk to Visa, they'd tell you, roughly what they see is a 20% increase in card utilization after somebody makes their first ever contactless purchase, whether that's with a card or a mobile wallet. And so if I were a card marketer, I'd really be thinking about, one, playing up the benefits of contactless to my card holders, and also getting a bit more strategic about reissuance. I think what we've seen, to date is natural reissuance when it comes to contactless, or perhaps upon enrollment of a new account. But there are certain demographics that we see in our research, particularly consumers under the age of 44, that don't yet have a contactless card but are very much interested in receiving one. So I think there's a real opportunity to get a bit more tactical around contactless reissuance, very much so fueled by what we've seen from the pandemic.
Great. Beth, do you have anything you'd like to add to that?
No, I was actually going to ask Jordan because I'm curious. I kind of feel like the alternative payment providers that are giving me a debit card are putting contactless on there, so I can tap. But some of the bigger banks may not be enabling contact, and I'm just wondering if your research showed that.
Yeah, we didn't get into anything too specific around the individual providers, but I'd echo that sentiment. I've got a cash card myself. I've got a Venmo card, and both of them have contactless capabilities, which is quite interesting. Also interesting to see Apple's approach with the Apple Card. Is skewing contactless on that card with the idea that they want to guide users' hands towards the wallet, towards Apple Pay itself. So it's been interesting to see that play out. But I think broadly speaking, any of those new kind of debit products coming from the fintechs increasingly coming with contactless capabilities.
Got to get the rest of the banks to do the same thing, though it is a little bit more costly. The price has gone down so much these days.
Yeah, absolutely.
Well, let's pivot then towards there. Mindful of the time, I wanted to talk a little bit, focus on the consumer side of this, and particularly low and moderate income consumers. So we have seen great success during the pandemic with the payments industry stepping in to help distribute stimulus dollars through the use of prepaid cards and P2P services, including some we've been talking about. So Beth, for you, how can we continue to assist those low and moderate income Americans? And as we think about going forward and bring the unbanked or the underbanked into the payments ecosystem?
Yeah, so let me talk about it in terms of the stimulus package going to consumers, and who in our industry are the ones that stepped up to do it. We like to talk about domains of payment. So income is a domain of payment, just like the point of sale, if you will. So income basically is, consumers getting their salary, their benefits, rebates, expense reimbursements, all of that. And traditionally, it goes through direct deposit, right? To a lesser extent, paper check and sometimes payroll cards for those that don't have the traditional direct deposit environment. So in this stimulus package, $2 trillion of stimulus, 80% of the people did receive it via direct deposit because they are the banked ones, Jody, right? It was, if you had an IRS account credentials, which meant you were a tax filer, then they knew you had a deposit account and they could move the stimulus money to you. If you didn't have a bank account or you were a non-tax filer, you were directed to an IRS portal to enroll for the stimulus check. You had to enter your name, your address, your date of birth, your social security number, and bank account information if you had it. But that's a lot of PII, a lot of personal information, and we actually know that that particular act led to fraudulent interceptions, and therefore identity fraud was up in April. Sadly, too, over $1 billion in stimulus aid was sent to deceased individuals. But more importantly, you asked me to address the ones that were underserved, perhaps. And it's exciting to know that the prepaid industry kicked into action. About 4 million Americans received their stimulus via prepaid. These were stats as of May. Companies like Walmart, 7-Eleven, MetaBank, Fiserv all participated, helping their end users get stimulus payments. We also saw several non-bank alternative payment providers such as Chime and Current step in and offer other options. Chime, which is a neobank, offered partial or full advances of the stimulus check, helping their customers with that moment in time when they needed the money a little bit before the time that they were actually getting it. And this is in stark contrast to some of the horror stories we heard about service outages that plague some other funds transfer companies and all of that. The other thing I'll just mention, even though this is whether you think Square is an alternative provider or not, they definitely rely on traditional financial services. Square Cash, and this is according to Jack Dorsey in his most recent earnings report, they actively marketed their ability to provide individuals direct deposit with their Cash App. And their users climbed over to 10 million in just 4 weeks. So what does that mean? What is the implications? So first, this is not a bank or FI problem to solve alone. It's certainly not a government problem to solve alone. It's going to take a village, right? We need all alternative providers, traditional providers to support the total American population. Second, I'm going to go back to my notion of this immediate funds availability, faster, immediate money is the most important thing, and it's here to stay. So I think we're going to see a lot more energy on that. Earlier today, we heard again from US Bank and Zelle about you work a day, then you should get paid that day, and they're developing solutions for that. So we had a little bit of uncomfortable support for stimulus with the underserved, but I think we're going to get better, and we're going to have other parties step up in the value chain, even more so than just in April.
That was a really helpful recap, and I agree with you. This was, I think, a proud moment for the payments industry, broadly, stepping up to help in a variety of ways, and not only delivering stimulus checks, but also assisting with the PPP program. I mean, really pulling together and working to get funds into the hands of those who needed it the most, and to your point, as quickly as possible. Well, I want to make sure I ask this question and then leave a little time for questions. So having talked about all of this and all the challenges we face and the ways that payments has responded, I'd like to end with kind of a big question, and I'll start with you, Thad, and that's a silver lining question. What are the silver linings that we see in this pandemic? What are the opportunities and silver linings that you're seeing?
Yeah, there are some things that you can do right now that you couldn't do when business was running at business as usual. When volume is slow, it's a really great time to evaluate your core processes because you don't have the volume, the scale, and the demands that you have ordinarily. So it's a good time to check that. There's a real opportunity there to take a look at what you can outsource to third parties that isn't core, potentially improving the efficiency of your operation and also lowering costs and overhead. Secondly, reallocate resource to areas that have growth potential away from business as usual stuff. I spoke with the president of a lending company a couple months ago, and he said when they shut down, he discovered that his core process ran just fine with no people. And so he cut about 80% of those people and reallocated those to new business ventures, and absolutely nothing happened. So that's a good opportunity for that. Lastly, it's a great opportunity to strengthen customer relationships. Christine Berry, my colleague, says, that a crisis is the time where you can either make a customer for life or lose a customer forever. It's a time to be flexible. It's a time to listen. I think it's really important that we all appreciate that all of us are under duress, and it's going to be a long time doing that. So if there's an opportunity to change the rules a little bit to keep a customer happy, if there's a way to bend the pricing a little bit to help out for a little while, those things will never be forgotten. And those are really important exercises to do at a time like this.
Great. Jordan, Beth, anything you want to add? Any silver linings?
Yeah, I'll just kind of piggyback on Thad's last comment. I thought it was really important. I do think this is a time to recommit to your customers. People remember how they were treated during a time of adversity. And when customers look back on this year, I know I will, I'll remember the businesses that showed empathy and the ones that didn't. And I think what we can say with some degree of affirmity is that not all banks and payment vendors responded proactively to the financial hardships that their customers face, or their cardholders, their merchants face. Things like repayment leniency, fee waivers, responsive support, just flexibility in general were all practices that the customer-centric players in the payments industry quickly instituted as the pandemic took hold, back in March. And I think those efforts will pay dividends as normalcy returns and customer spending power increases. They'll be more likely to return to those businesses that, again, showed them some degree of empathy during a challenging time.
Wow, it's hard to follow that, and I can't argue with my colleagues here. And kind of, I'm going to agree and say it maybe in a slightly different way, but not much. The new norm is touchless, integrated, and immediate. And the banks, the merchants, every single provider in the value chain has to focus on improving the customer experience. I think you're right. We'll remember how we were treated during bad times. But across these three attributes of touchless, integrated, and immediate is one of the most important things that I think will stay with the payments industry and drive much of the innovation we'll see going forward.
Yeah, that's interesting and important insights. And I guess I would just add, there was a few themes that ran through the discussion today from all of you. Clearly the theme of accelerating innovation, innovation that was already happening, but that's accelerated by this pandemic. And most of which I think I heard from all of you is here to stay. Things like touchless, contactless, and the importance of frictionless payments and kind of meeting your customer where they are. Now that we're making that pivot more quickly, and both consumers and merchants are seeing the benefit of it, these are all trends that we're likely to stay, that are likely to remain. So in the silver lining category, I think we've heard from everybody on that. So we have about 5 minutes. I do want to make sure we allow time for questions. So I think their timing is good. And so folks can submit questions through the chat feature, and they're going to get relayed to us if technology cooperates, and we'll put them to the panel for response. All right, so there's a slight delay here because they're getting relayed to us. While we're waiting to see if there are any questions, let me put this one out to you real quick. So we talked a little bit about trends that we think will endure, contactless, touchless, some of the other trends we touched on. Are there any others that I've missed, or are there others that you think will not, that are moments in time? Put that to anybody who would like to answer. And somebody's trying to send me questions, but I can't read them. So maybe if somebody has them, you can just pop onto the screen here and put them out.
Do you want me to read a couple of them that came?
If you can read them, that's great. I cannot.
Yeah, that's okay. So I think, Jordan, this is going to be for you or maybe Thad. One was asking, since frictionless and contactless payments will be the trend of the future, are there current solutions in place that don't rely on Wi-Fi and that you can do AKA offline, if you will, in a wallet payment? And then the second question that is a little bit related, and this is, Jordan, directly to you. You mentioned contactless users are the most valuable. To whom are they most valuable, or is it across the ecosystem? So maybe, Jody, should I have Thad do the first one and then Jordan? How do you want to do that?
I think I can just jump right in.
Well, for, getting back to the idea of contactless, you have to have an offline capability to support payment transactions. If the system goes down, you got to do it. Most POS systems have the capability of handling that. So it can be done in an offline environment as necessary. And that's, I think, one of the reasons why contactless will do well going forward.
Some of the merchants, though, I've experienced, they went down. Mm-hmm. I've had a couple of those scenarios, so I don't know how that plays in, but yeah, then I had to use a card.
In that case, if you have a digital alternative, that's where you can use it. Yeah. That's where you can go online and make a payment that way.
Yeah, to address the latter half of that question, Primarily banks, right? So we're talking about cash displacement. We're talking about transactions that were traditionally done with paper currency, now moving over to the card rails. So it's really the card payment ecosystem in general that benefits from that shift. Cash transactions moving on to electronic payment rails, good for banks, good for processors and acquirers, good for the networks, of course. Conceivably good for merchants as well. I mean, I know there's some misconceptions around sort of the cost of cash handling. It's actually quite high, right? There's a lot of efficiencies to be gained when those cash transactions move over to the card rails. So there's certainly a merchant benefit as well. I think really it's an ecosystem gain, but probably the banks, the networks, the processors, enjoying the most of that shift.
Well, Beth, I think we have time for one more question, if there's one more that you can see and read. Although we literally only have about a minute left.
Nope, there's no other questions.
Right. Well, then I think we ended remarkably on time. I want to thank all of you, Beth, Thad, and Jordan, for your time and your participation today, and for a great panel. Have a great rest of the day.
Thanks.
Thanks, everyone.
Bye,
Bye-bye.
everyone.